It does take us to our talk of the tape, how much stocks can keep rebounding if those daily tariff twists and turns keep coming. Let's begin with Eamon Javers at the White House with the very latest on that always developing story. Eamon, what is the latest?
Well, Scott, we got a couple more twists and turns just in the past couple of moments. President Trump just hosting an event with some Hyundai executives announcing a major investment in Louisiana, brought some reporters into the room for that event. I had the chance to ask him a couple questions about these tariffs that he's been talking about today. I asked the president about this idea of tariffs on Venezuelan countries or countries that do business with Venezuela. He's tweeted earlier today that he wants to put 25% tariffs on any country that does business with Venezuela. I asked the president if those 25% tariffs are on top of existing tariffs on those countries. He said, yes, they are. I said, does that mean you're contemplating 45% tariffs on China next week? He said, yes, those tariffs would be on top for any country that's doing business with Venezuela. As we know, China buys a lot of oil from Venezuela. So if this goes into effect next week, it could be a significant disruption for people who are importing from China. I also asked the president about this idea of reciprocal tariffs next week on April 2nd, and would there also be sectoral tariffs going into place? He said, yes, there will. There will be automotive tariffs and others coming into place. He didn't specifically say on April 2nd, but there will be additional tariffs coming into play as well on the sectors in addition to the reciprocals. So confirming that storyline. And then I asked him about his executive orders against big law firms that he feels have been working too closely with Democrats and working inappropriately in his view. I asked the president what his message is to the big corporate clients of those law firms. Should they get should they get other lawyers? The president didn't go as far as to say that, but he said these big law firms need to, quote, behave themselves. And one other thing, Scott, from his appearance in the Roosevelt Room just a short time ago, the president did say that he might be flexible in terms of offering breaks to some countries on their tariffs on April 2nd. So we're going to have to watch for that as well. Back over to you.
Yeah. Eamon, thanks for that. Appreciate that. That's Eamon Javers, North Lawn of the White House. Now let's bring in Dan Greenhouse of Solus Alternative Asset Management, Stephanie Aliaga of JPMorgan Asset Management, and Shannon Sakosha of Neuberger Berman. Shannon's a CNBC contributor. It's great to have everybody with us. Dan, you heard the headlines. Twists and turns don't seem like they're going to end anytime soon. For now, the market seems poised to keep bouncing.
Yeah, I think there's 2 points to make. The first of which is nobody really knows what's going to happen and when it's going to happen. And so we look at April 2nd as the target date for when a lot of these tariffs are going to be announced. But the truth is we don't know what tariffs are going to be announced, on which goods they're going to be announced, when they're going to be announced. And these are important points that the market's looking for. And the other secondary but tangential point is you look at the response of the market today to the headline that some of these tariffs might be delayed in the Wall Street Journal this morning, and then that he might have carve-outs in the headline this afternoon. The market rallied after both of these headlines, and it really drives home the point of how levered the equity market is right now, but risk assets in general, to these tariff headlines, both the positive and the negative.
Yeah. So what do I do, Stephanie? I mean, you're going to continue to get these headlines. We know that. We've had a nice bounce off a 10% correction. How do you feel?
Yeah, I think we're in this period where markets are still digesting the fact that this tariff overhang isn't going anywhere anytime soon. And the 3 most dangerous words for an economy are wait and see. And so long as uncertainty persists, there continues to be considerable downside risk to markets and earnings expectations. So I think for investors, it's a really important time to just make sure your portfolio is set up for a wider distribution of outcomes. Recession is not the base case, but the probability of one has increased.
Okay, Shan, so on that note, I mean, are we essentially in a binary market? If you believe that you're going to have a recession, then stocks are too expensive, even with the correction that we've had. If you think it's just a growth scare, then you think the bounce just continues. How do you see it in terms of that equation?
Well, it depends on what you mean by a growth scare and how long that lasts for, Scott. So we already know that the first quarter for GDP for the U.S. is going to be pretty challenging. We know that because of inventory build and weather and dampened consumer spending. But if you look out in the second half of the year, it's really what you think that wider range of outcomes is. And so if you're looking at 1.7 or 1.8% GDP for this year, that probably still supports some of this cyclical rebound. We've had a re-rating in the tech stocks, and obviously we've seen that unwind in momentum. We're seeing some signs of life over the past couple of days. I think what investors are struggling with is that there's going to be a period of time over the next couple of months where you're waiting for some of that pro-business sentiment, that deregulatory impulse, and frankly, for the direction of the attention of the White House to shift to Congress and taxes. You're waiting for that to happen so that businesses can become more confident and start to really commit themselves to the CapEx and the hiring that was really earmarked for the second half of the year and into 2026.
In other words, Dan, can we just get to the good stuff?